has instead led to widespread economic disruption and job losses. Announced in 2018 under the guise of national security, these tariffs were intended to revitalize domestic production and shield us manufacturers from foreign competition. However, the outcome has been far from what was promised. Instead of creating sustainable jobs and boosting production, policy triggered a cascade of unintended consequences that have hurt the very workers it aimed to protect. When the tariffs 25% on steel and 10% on aluminum were introduced, there was a brief spike in demand for domestically produced metals. This short-term boost gave some companies like U.S. Steel a temporary advantage. Imported metals became more expensive, but this initial successfully unraveled. The increased cost of raw material economy affected manufacturing, because aluminum soaring input costs forcing move operations over to is the lack of reinvestment. Modernization steel industry, despite the temporary market protection afforded by tariffs, major producers like US Steel did not use the opportunity to upgrade aging facilities or invest in new technologies. Instead, they focused on short-term profit maximization, including tax and executive bonuses, some over maintenance and energy and capital unclearly landscape. They rerouted their expectively sending the presence and strategy allowed buyers and national markets of American steel. Meanwhile, domestic buyers found themselves paying higher prices without any corresponding improvement in product. The human toll of in-depth thousands of workers like Granite City, Illinois, and Pennsylvania have lost their jobs overnight. Layoffs came suddenly, without warning, off mail once proud hubs of industrial economic uncertainty and declining prospects. Small businesses that depended on restaurants to auto repair, even the trend advisors in the short-term isolated. Commerce Department admitted that the net impact of the tariff unclear and powerful to the broader economy. Yet the political narrative persisted, with Trump continuing to tout tariffs as a win for America, despite mounting evidence to the contrary. Behind the scenes, lobbying efforts played a significant role in tariff policy. Industry groups like American Iron and Steel spent millions pushing for aggressive import. Their pitch was simple. Tariffs would allow them to rehire workers, restart plants, and reinvent manufacturing. But otherwise, was a small bump after the tariffs were implemented, layoff months. At the same time, were granted to large operations, giving them advantage over smaller firms. The situation when Stellantis, formerly Chrysler, announced a step-down in production in Canada and Mexico following the implementation of new 25% tariffs on imported vehicles and parts in 2025. This impacted approximately 900 U.S. workers importing plants in Michigan and Indiana. The Windsor assembly plant in Canada and the Tuca assembly plant in Mexico were paused for 2 weeks and an entire month respectively, disruptions that affect the North American automotive industry. Trump's response to these development tariffs and the layoffs as a policy, he framed them as necessary pressure on manufacturers to consider their global production strategies. His administration argued that the tariffs would ultimately force companies to reshape manufacturing operations to the United States, where they avoid the burden of import duties. To support this transition, Trump signed executive orders to ease some aspects of the tariffs, including providing temporary credits for U.S.-assembled vehicles using duty-free parts. However, the immediate effects of these policies have far from ideal. Automotive prices are expected to rise between 5% financial strain on consumers. For companies like Steel operates at only 52% capacity utilization in its U.S. plants, transitioning production back will require substantial investment and time. Analysts project that such changes could take up to 3 years to materialize fully, leaving the industry in a state of flux for the foreseeable future. The broader implications beyond the automotive sector. The Tax Foundation estimates Trump's tariffs could increase taxes on U.S. households by nearly $1,300 in 2025, reflecting higher prices for imported goods across the board. This economic pressure could dampen consumer spending and create ripple effects throughout the economy. Additionally, retaliatory tariffs from trading partners like Canada threaten to escalate tensions and further disrupt established trade relationships. For workers caught in this transition, the stakes are deeply personal. Union leaders like UAW President Sean Feon have criticized the layoffs as unnecessary, arguing that companies like Stellantis have the resources to employ thousands more workers if they chose to do so. The contradiction between Trump's of revitalized manufacturing and the reality of job losses highlights the complex interplay between trade policy, corporate behavior, and worker welfare. In conclusion, the Trump administration's steel and aluminum tariffs represent the case study in the unintended consequences of protectionist trade policies, coupled with ineffective enforcement mechanisms and corporate opportunism, has left many communities worse off than before. As the industry continues to grapple with these challenges, the long-term impact on American manufacturing remains uncertain, underscoring the need for thoughtful, sustainable approaches to trade policy